Introduction. We all have to pay taxes to the government. When we earn income, a percentage of that income is paid to the IRS and goes toward all the services the government provides, like schools, roads, and healthcare programs. Typically, the more income you earn, the more you have to pay. Luckily, there are rules built into the system for taxpayers to lower their bill, allowing you to keep more of your hard-earned cash. Unfortunately, the rules for filing and taking advantage of these can be complicated and frustrating. Understanding tax deductions. One of the most common way of reducing a tax bill is with a deduction. A tax deduction is a way to reduce the amount of income that you're taxed on by claiming certain expenses. Imagine your yearly income as a pie. Without deductions, you would be taxed on the whole pie. However, deductions allow you to effectively remove a piece of this pie. The government then only taxes the smaller pie, which means you pay less in taxes. Tax deductions lower your taxable income, reducing the tax rate you're charged. Not all expenses qualify as deductions though, and there are rules and limits on how much you can deduct. Understanding tax credits. Tax credits, on the other hand, are more direct. They work like coupons, directly reducing the amount you owe in taxes. They subtract from the total amount of taxes you owe, dollar for dollar. For example, if you owe $1,000 in taxes and have $200 tax credits, you end up paying just $800. The government will issue tax credits for all kinds of strategic reasons, mostly aimed at encouraging specific behaviors or supporting certain groups. The Solar Investment Tax Credit (ITC) was first introduced in the United States in 2006. Ever since, it has encouraged people to install solar panels at their homes or in their business by offering a significant credit based on the percentage of the total system cost. The role of tax appetite. But there's a catch. To use tax credits, you need to owe taxes. This is known as having a tax appetite. They're like coupons that only work if you have something to spend them on. So if you don't owe any taxes, you can't benefit from these credits. They're only useful if you have a tax bill to reduce. That is, at least until now. Changes brought by the Inflation Reduction Act. Recent changes, thanks to the Inflation Reduction Act (IRA), have made the solar ITC even more beneficial. Not only were the duration of these benefits extended, they were also modified so that if you can't use all of your solar tax credits because your tax bill isn't big enough, you have options. These credits can now be transferred or even sold, which wasn't possible before. Conclusion. This opens the door for what we do here at the Tax Credit Exchange. Whether you have unused credits to sell or are looking to reduce your tax bill through buying credits at a discount, we offer a platform that makes solar tax credits simple. Taxes might seem complicated, but with the right information, they can work to your advantage. Our team is dedicated to helping you navigate this new landscape and understand all your options. If you'd like to learn more, our website has tons of resources. You can also reach out by phone or email, and we'll be more than happy to answer any and all of your questions.